The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon at 877-927-6648. I got you on the TV screen, Tiger TV. You can see it. Introducing the Chapman Wave methodology by Basil Chapman, chart analysis in the stock market. I'm going to be discussing a number of patterns that I think you're going to be looking for over the coming weeks. And so let me set that aside right now. Go to the numbers because very important session. The Dow is down. Actually, let me do it with the charts. The E-mini is down 850, and you can see this wedge formation. I spent a lot of time for my subscribers to my opening call discussing it, saying how perfectly we've been going into this Chapman Wave inside track resistance, declining trend line, rising trend line in a sideways V-shaped formation, coming towards the apex, and I gave the exact support levels, and we hit the target on the upside of 2161, and now we've reversed, and we haven't gone down to the lower level, which I think we might do by Monday, which is 2144. So here we are. Weekly chart, peak D. Monthly chart, peak B. Still very good technicals in the price. Not so much the technicals in the MACD, which is flat, but the stochastics 94%, and that's really good. So now let's go through the numbers. INDU, Dow. The Dow is at minus 34. It had a nice spike of about 40-something points, then a sharp drop, and now it's back to the minus 35 level at 18,233. Here again, this is what I showed my subscribers. Very clearly, this inside track repellent zone, and you can see it, the stochastic on the daily chart has crossed positive, but it's down at 50%. That's really very weak. And the MACD is good, which is why the price is holding quite nicely here. I'm not going to get into all the politics of it. I will talk politics in a moment if I can get everything else done. So let's continue. So that was the Dow. Dow parameters make it really clear until the Dow goes above 18,375, and it's at 18,232 right now, so it's about 140 points higher. And the that would be a positive and suggest that it could make an H to an M pattern going towards the 18,449 high of September the 22nd. On the downside, any break of 18,120 to 18,100 support is very negative and suggests we will test the low 18,100 to 18,000 level within a very short period of time. The weekly chart is suggesting that there is a potential arch formation. And now let's go to the S&P SPX.X. The S&P, same thing. I didn't put it in here, but I'll put it in right now. This is the inside Chapman Wave inside track resistance. It needs to break above 2167. It's 2155, down 6 right now. And the support level of the 9-period moving average at 2158 is now resistance. And you've got to see, let me put this in here. This is the Chapman Wave inside track support level. Ooh, we're right there. A close below 2151, it's at 2155, will start to head towards the lower part of the band, and that would make 2150 very important support. Weekly chart, the technicals are starting to weaken, and in fact, you're looking at a potential for an H pattern. The QQQ. Now, I had a very nice email last night. Someone who had called into Tom's show and wanted to discuss in a little bit more detail what she was looking at. And I'm just going to show this chart for a moment. This is the art of the charts. This is what Dave White, the program that Dave White put together, based mostly on Tom O'Brien's work on his book. I've got it right in front of me. Where did it just disappear to? Tom's book. Where did it go? It was right there. Well, on Tom's book, and right there. So what we're looking at is within this pattern, there is a Gartley formation. And the question was, since there's a Gartley formation, what would make, basically, is that a sell signal on the QQQ series, the power shares, which is the NDX 100? I'm going to deal with that in a different way. I'm going to deal with it based on the Chapman wave methodology. There was another question, which I will do just at the same time because the two came together, because I discussed it with Tom yesterday. And that is the DBC, which is the Power Shares DB Commodity Index Tracking Fund, called the DBC, a fund that we've owned for a while now, which is doing very nicely. And she said, hey, there's a Gartley pattern right here. So let me just deal with these two right away. So the QQQ has made what I call in the Chapman wave. This is a modification of my CD that was done in 2005, 2006, and CD book, 476 pages, slides, I should say, and 26 chapters with questions and answers and quizzes and all sorts of things. But basically what is going on right now is a pattern that I call the double top. Let me see if I can do it in a different context. Double top. So this is the chapter 22. So we'll go to chapter 22 right now. There it is. Chapter 2, it's a pattern I call the drop bucket formation. It looks like a lowercase h upside down and inverted, or a y backwards. And what happens is it gets to the top, and when it fails there, a whole bunch of things can happen. I'm going to discuss it now in terms of what I'm looking at. A pattern that I've started to work on for a long time, Peter, who trades currencies a lot, way back, always asked me about it. We were at one point looking at the EUR USD, and I kept saying, you know what, there's a double top formation here that I've been studying for a long time in different charts, and it says it just fails to make peak D, because in the Chapman wave, we're always looking for 4 higher peaks, and then other things can happen. That buy signal to buy mode, very powerful, powerful indicator. Well, sometimes it just fails. In this case, 119.22, peak C1, and peak C2 is 119.17. And that says maybe we're already making some kind of a top here. The weekly chart has done the same thing, and that's almost like a double top, but it hasn't broken down. So this is a pattern, and I say, for me, I'm well within the context of looking at this as a potential top, but I'm having the patience to see if there isn't one more spike to go above 119.22 to make that leg D. Very often it does work out that if you have the patience, you can get there. But in the meantime, this is a topping formation that I'm looking at in the Qs, and we're just going to watch it real closely. In the DBC, we've gone to that leg D. That was yesterday, and I said it's still going higher. We've gone to the leg D. We've got a doji high, but the weekly chart is still very strong. And it says we could, in fact, go to the 1559 level, and we're at 1526. That's number one. Number two is within the context. I'd also said, because this has gas, crude, gold, zinc, soy, corn, and sugar, I've got to look at it a little differently. If I look at it with the crude oil, crude oil is in leg C, and it looks like it still wants to go to a D. So that says to me, yeah, you can have a Gartley, but I don't have any signal at all in the DBC or even in crude to say there's a short-term top. Maybe early next week we'll have it. Let's just look at bonds in the meantime. Bonds are plummeting. They're down 42 seconds in the TLT at 133.41, I should say, plummeting. I mean, that's a capital, that Eiffel Tower, single leg A up and a move down. And we will look at the dollar, because look what's happened to the dollar. The dollar is in leg E, a beautiful move up to leg E. I'll be back. Basil Chapman, Tiger Technician Self.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So there are a whole bunch of patterns that we're looking at here. If you're looking at the cup pattern, let's go to chapter 5. Chapter 5. Right there. Is that the one I really want? I got the arch, I got the cup. I think that's going to be the one. Let me just see. No, I want, this is the cup, cup and health. It's not 461. Oh, I know what I want to do. Chapter 15. Okay, let's go to chapter 15, and that is the one that shows you a bunch of things. So in that pattern that I was talking about, the drop bucket formation, there are a bunch of things we want to look at that has the same configuration, and that is when you get the left side ellipse, the sideways move that makes for the left side of the cup. And remember, cup and a bowl are two separate things. A bowl is flat, and it builds a lot of pressure to eventually break out. In this case, I could have stretched this out because it's a monthly chart going back years, and it did form a bowl formation at some point. Gold, this is gold, 1991 to 2005, and eventually when it broke out, it turned out to be to the exact bottom on the monthly chart. You got a left side right side price time match that took you to the exact break. I remember being on air when we broke out on the right side, and that was quite amazing. And that was taking us to a move that was above the 1996 high. And within that, you have the channels, you've got a cup formation, you've got the Chapman Wave inside wedge resistance, the inside track, the inside wedge is the target line there, going to the top with the arrow. But within that, you've got a resistance zone that I call the inside track resistance zone. And you've got the support zone, the green line, channel. So I just wanted to show you those are the different things, because markets are made up of three moves: a single leg up, or at least let's put it this way, a single consecutive series of highs or lows, or you get a cup or a V-shape pattern. They're the same. They essentially have the same configuration. One but just looks like a cup. One is a V-shape going from the left side high to a low, and then back to the left side high on the right side, or the inverse, an arch or an inverted V. So three patterns: straight line, cup, or arch. All right. Well, within this context, the dollar even though it's at 96.50, having had a spectacular move to the upside today, not getting to 97.57, but getting to 97.90. Remember yesterday I was saying, oh, if we could just see 97.20s and holding there, that'll be really important. The fact that it's gotten there is good. The fact that the stochastic is making that inverted V is makes me a little nervous, saying, hey, this could come back and retest the 96 level. 96.06 is the 9-period moving average. So we've got to watch this very closely. Let's put this together with gold. GC. Gold had a very sharp decline. White background. No, I'd like to see some chart there. Let's go. Something's happening. Nope. Control R. Give me that. There it is. So what we're looking at here, the daily set doesn't seem to want to come up for a moment. Format. Yep, there's everything closed. That should be good. So in the meantime, this will come up in a second. We've got the 120-minute chart showed went to peak A, peak B, and then it suddenly plummeted back down again. And one of the reasons is when you're looking at a larger tide, talking about the hurricane right now, I mean, the larger tide is what all these little configurations mean nothing to the larger tide. In this case, the down move of the weekly is so powerful with the MACD and stochastic still negative. Why is that happening? Give me 1 second. I'm just going to close the workspace. Yes to all. Come back again, and it'll be there. So let me continue with my thought. That the larger tide is what really, you can have counter trend bounces. There's no reason why there shouldn't be obviously such a smash to the downside, why you couldn't have a counter trend move in the gold. But white background, there it is. But the real issue is you're looking at a little kind of a bounce within the context of a bigger move to the downside. So I'd be a little nervous here, unless it's a real short-term trade, doing anything on the long side with gold. Remember yesterday we were talking about this, and I went through it quite carefully with Jack. I think we were looking at the silver. And I said, yeah, if you've missed a good opportunity, now you have to wait for a bounce. Well, we got that bounce today. Now we pull back. We're looking at gold up $3 at 12.56. Well, there was a moment it was up all the way to 12.67. Now it's at 12.56, 11 points lower. So I'm looking at this and I'm saying, I think that move in the British pound, Great British Pound, USD, if you look at this, that spike to the downside, it might have been electronically ignited to go down that far, but we were looking at weakness, and this just exacerbated whatever it is, exacerbated the weakness. And now what we're looking at is something that's very interesting, because the candle that's formed is going to be a candle that says, unless the Great British Pound at some point breaks under 1.2135, the midpoint of this long-wicked candle, and holds there for, I'd probably say, for 3 to 5 hours at any point in the next 2 weeks. If it does that, there's a good chance we're going back to retest the low. However, the way I'm looking at this could have been a climactic move to the downside, and there could be a bounce, and that bounce is 1.275 would be where the strong 9-period exponential moving average resistance is. I don't know if it's going to go much higher than that, but that puts us into the context of trying to put the Rubik's Cube back again. And in this particular instance, the powerful move in the gold continuous contract suggests to me that I said that yesterday, that I think we're getting closer and closer, that a bulk of the move to the downside might have been made. But there's still a chance that we're going to go at least towards the candle of the 10th of June of 12.44. And if that's taken out, then there could be a test of the low of 12.09. I'm going to go one step at a time and say that based on a lot of the gold charts that I look at, ASA, trying to hit the 9-period, the 200-period exponential moving average, good place to bounce on the daily. Then it has resistances at 1326 ASA gold precious metals, but 1373 is strong 200-period moving average resistance in the weekly. So I just think that this could be a little bit of a bounce in gold, but my thinking is that a lot more has to happen to the downside in time. Now, not as much in price, but I still don't think it's more than a short-term bounce right here. If you're looking at the XLF, nice move, same kind of candles for 2 days in a row, coming off the low. It's at 1962 down. Oh, it's at 963. I like it. I think it's because if you look at the BKX index, the BKX index is saying, hey, I'm having a high-level consolidation, but my weekly chart is still good. I'm in leg C, and there's a good chance I'm going to try it. 72.82 right now, down 13 cents. There's a good chance the BKX, the KBW Bank Index, is going to try for the 73.50 to maybe 74.20 area over the coming 2-3 weeks. I got to say that, because if it breaks under 72 to 71.70, this BK index could be threatening a lot. I want to talk about Amazon. I had a sell signal yesterday intraday. I'm watching it closely, and I'll explain why. And I'll be back. Basil Chapman, Dow's down 31, S&P's down 5.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So just let me put things in context for a moment here. I had a question. Well, I'm going to go back to the dollar for a moment. I had a question about what are the political ramifications, and would I just give a brief overview of what I'm expecting Sunday night? You know what? What'll be will be. All I can say is that I've articulated this I don't know how many times, that I believe very strongly to get the extra people not the fans that are already there, the Donald Trump fans, but to be able to get the regular folk, the people that are saying, I don't like the way he talks. I understand he's winning, and I understand that I'm tired of what's going on. I need a change. For those people thinking along those lines, I want him to be able to articulate in specific bullet points at least 2, maybe 3 specifics. In other words, maybe the economy, maybe he's going to talk about international relations, maybe he's going to be talking about borders. I don't care what it is, but he's got to just go step by step by step, and he's got to keep that consistently throughout the I don't. It's kind of not even a debate. It's the discussions. It's absolutely necessary. And for Hillary Clinton, she has to do something very different. She cannot be the attack dog. She's already got one of those. She has to do something very different. And she can't be the smiley face person because she's already done that. She has to articulate her thoughts on specifics. And I think if they both do that, I think there can be a big bump up for both of them. But as I was talking to someone the other night, last night, in fact, this is a very difficult. You've got all these people that are speaking for Trump and are speaking very articulately, but Trump is the guy that has to be articulate, and that's really important at this stage. In other words, you want each person to act what we think of as presidential, and Hillary Clinton has to come across as straightforward, and has to talk in a very not solicitous style, has to talk in a very not demeaning, not condescending, but has to talk in a way that bypasses everything that's going on with Trump, to talk specifically to those people on the sidelines with specific programs that she can do, that she can actually implement. That's the way it has to be, and then people can make up their mind. Otherwise, it's a free-for-all, and I don't think the people want a free-for-all at this point. People are saying, hey, this is a presidential. Okay, let's get serious here. That's basically what's happening. So it's going to be very interesting. Now, as far as the market is concerned, my way of thinking says that whoever they is, we know who they is the Fed and the policymakers, are doing everything they can to keep this market propped up. Can they do it for another 4.5 weeks? This is real tough. My thinking here is the market slides that we're looking at this year coming back down. You don't have to go all that much below 18,000, 17,700, 17,600. And then there's going to be a rally going to the last week of October into the beginning of November. Or they just managed to bounce this market. And I really do believe in this case that we've seen it before, so they can do it again. They have the power just to keep the market propped up all the way for 5 weeks, because this is already this is already about 3.5 weeks, 12th of September. Oh, look, it's almost a month. So they can do it for sure, whoever they is. And this is really the issue, because after that, no matter who wins, then I think we could have an even deeper decline in November, as the Fed says, aha, politics be damned. We can say whatever we want. We've been waiting to raise the rates, and we're going to raise the rates. That's when we can get the biggest decline. Meantime, we're short. We're staying short. We've added to our shorts. I'm really upset. 3 cents. We lost one of our shorts today for 3 cents. Inverted short, 300%er. I didn't want to make the stop too big. 2.2%, a big deal. I really wanted to hold it. We can get back in, but that was a beautiful price that we got in. What a pity. But we've got others, and they're working nicely. Now, I have to do 2 things here. I'm going to just show you Amazon one more time. The reason why I didn't go short on Amazon even the last time, I said, what a perfect risk to reward. 1 penny above the high, you don't want it. That's above 847.21, and short it right here. Perfect. Except I've only got the start of an indicator, number one. Number two is not only have I only got the start, I've got the 120-minute chart is the one that gave me the peak F top in the Chapman wave in Amazon yesterday. Yeah, I could have got short right at the opening, which would have been 845, 2 points off the all-time, less than 2 points off the all-time high. But this is still one of the strongest stocks. So I'd rather be shorting other things. But I just wanted to say that once I get that, then with the question last night about the QQQ, yeah, I think the QQQs are making a top right now. They could go just a tad higher, but within 2 points, I think we're within 2 points of at least making a pretty good 2 points up, but about 4 points down. That's really what I'm looking at. Okay, now Sarah wants to know about UTX. Okay, UTX is oh my goodness, gaps down. This is part of the dollar, maybe the dollar strength. There's the Eiffel Tower straight up to a doji peak E. The weekly chart is at 123, down $1.85. Look at that. And it's making the H pattern that we talk about. What is the H pattern? The Chapman Wave methodology. The dreaded H is chapter 17 right here. This is the pattern that we're looking at. Whoops, this pattern right here. There. And that pattern can keep going down as the left side is taken out. And then eventually it makes a larger lowercase h to a lowercase m pattern. Well, in this particular instance, we've already had one H. Here's the bigger H. And now we're going to see what happens. This is not good news for the general market. GE looked horrible. It looks even worse today, down 30 cents at 28.97. Triple M, this is my Dow Quartet. Horrible chart in the daily. Weekly chart made a peak C1, C2. There's an example of that C1, C2. Perfect. 182.77, 181.66, and now we're pulling back. So be careful out there. What was GE, Triple M, UTX, and IBM. IBM also ugly day today. Down, only 65 cents. So this is not good. That's number one. Next question is, yeah, I think it's dollar affected. But it's also that they ran out of energy. Walmart. So Bob wants to know about Walmart and the RTH. Walmart, there's the lowercase h that goes to an M pattern. And there's the failure in the weekly. Terrible. Walmart is down sharply. Look at the RTH, which we wanted to short right there at the top. And I said, hey, you know what? It's very difficult to get the shares, number one. And I said, we've got other things. But look at this pattern. This is not good for the season coming up, for the holiday season. This is very, with Amazon, that's the reason why I didn't want to short Amazon. Amazon should still benefit from this holiday season, even if there is a slowdown overall. Anyway, that's what I'm looking at. Next question was the XRT, which is the S&P, the one that I don't like nearly as much as the RTH because it has more the esoteric stocks, but it's holding okay. It's a little bit better, actually. Before it was looking better than it was looking worse at the top than the RTH. Now it's looking a tad better, but doesn't look great. So the XRT at 43.94, 5 cents. Must have a couple of stocks in there that are doing okay. Groupon, GPS, that's the gap. Out of something or other. And Sears Holdings. Yeah, Burlington. Yeah, we'll see.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. Just had well, hopefully it's not as sad news as it appears, but it's really sad. This is from my daughter. She has a lot of communication with people in Haiti, where she's been very often. She said, I'm okay. The situation in Haiti is very severe and still no communication from the south, which was most devastatingly affected. You've seen those pictures with 350 so far, presumed dead. This is where my friend Sebastian's family and community are. He's in Boston right now and hasn't heard from his parents or anyone since Monday. Can you imagine seeing the pictures, not hearing from your family? Today is Friday, and since Monday, not a word. And the images from that area are heartbreaking. Yeah, I agree. Well, white lightning to everyone involved. It's just nature. You know, this is the fascinating thing about looking at Mother Nature. I always say this when people talk about global warming and all that, and I say, hey, you look at a chart of global warming. I've shown that chart before. It is straight up. There's just no question. I don't know how anyone can even question global warming. There is global warming. You can see by the charts, just the level, the measurement. But man-made's contribution as a percentage of what it is, I don't know how you measure it. That's number one. I'm not arguing. I have nothing to do with arguing with scientists. I'm just saying that when I have flown from Boston, say to London, and there is a cloud cover that is 3,000 miles wide, or whatever it is, 1,500 miles, that's Mother Nature. When St. Helens goes up, that's Mother Nature. These moves that we're seeing now, you can't stand there with a little sign saying, stop, stop. These are massive moves. When you talk about pollution in the ocean, have you flown over the ocean? Yeah, you see little bags and you see garbage and stuff. And I hear from sailors, I know people have sailed the world on seaboats and they talk about what they see. But most of the time they don't see that. And it's an incredible thing because, once again, you don't want to see pollution, but you've got to look at this immense body of water. That's the perspective. And that's why I'm saying that the trend right now for me, looking at the dollar, remains up. It looks like it's up, but it hasn't broken out to the extent that I can say, whoa, that's a real tide. But when I look at the daily Dow, INDU, I'm saying, you know, the trend in the Dow is in a sell mode. The weekly, by the end of the day, by today, could go from a sell signal. I might have to upgrade to a sell mode. I don't know yet. I need it's down 96 right now. If the Dow closes down 150, I'm pretty sure I'm going to have to go to a sell mode in the weekly. I don't know how the Fed or anyone there who's holding the monetary strings is able to buy enough stock when you've even got your Amazon turning down. The QQQs look like they're about to turn down. The best that I can see at this point is that somehow the market supported. But I would not be surprised if right now, it should have been this past week, we should have been going down so that the Fed can come in like they usually do. You remember in 2008 for the second election? 8 was the first. 14, 12, whatever it was, 12. Where how the Fed came in and held the market up. What was it? That was 2012. Here we are. We're looking at it, and the market pulled back very sharply, and lo and behold, early October, the market starts to go, hold the 10,000 level, holds 10,400. I'd said a break of 10,000 would be very negative. But in fact, it held 10,400 and then it ran. So this is going to be very important because I think right now, the measure that I would have somewhere in the by the middle of October, that's another week or so, 17,800 to 17,700. And then you got to watch out because if there's a break to 17,000, the low of 17,063, other things are going on. It's going to be a little more difficult for them to come in and try to push the market up. That's all. So now what we're looking at is a situation where on a intraday basis, I don't know if I, again, forgot to show this, there's almost like a one-to-one in the single leg A. Remember the single leg A up that I talked about, the Eiffel Tower move in the Chapman wave? You can go, it's futures related very often. Happens early in the day. Look, there it is, the 9 o'clock spike to the upside, 840 spike. Created that pattern that I call the single leg A Eiffel Tower, straight up, straight down move. Well, we've done that. And now we're even making a one-to-one to the downside. This is serious stuff. One of the reasons why we added to the shorts, and I am so upset. One of them just missed today. We got it yesterday, and I had to stop fairly tight. And although the core root position is we're still short the root, the triple that we wanted to go with it, that got stopped out. That's a shame. We got others. That's fine. So in the meantime, let's go back to our thing. We've got Jerry in the back bay. Jerry, how are you?
Good. How are you?
I'm very well, thank you.
Yeah, I want to bring up a general topic, Honeywell and PPG. I mean, one of the main things affecting the market today, these are like two really good companies.
Outstanding companies, yes.
And they both reported very disappointing prospects, and it's taken down all of the, the UTXs and the Triple M's and that type of thing. So I'm curious what you think of the Honeywell chart. And PPG is in the same thing. They're down 6 or 7 today.
So I was going to look at Honeywell yesterday. I saw it was, I think it was yesterday, last night or something, the news. I don't even remember how I saw it or where I saw it because I was out most of the night.
They cut their earnings estimates.
Oh, that's what it is. Oh, okay. Maybe it was early this morning that I saw it. Now, what's really important about this, I was following this very closely because I've got a big question with my weekly chart worked perfectly. It made a peak E. You've got that arch formation that I talk about. It had a double, the lowercase h goes to a lowercase m, and now it's plummeting. So, but in my monthly chart, I wanted to go back to it since we don't own it. I didn't really spend too much time on it. I was going to when I saw the something about the earnings, and then I completely forgot until you just mentioned it this moment. So Honeywell, folks, trading at 105.96 is down 8%, 8.35. It's down $9.65. That is a huge move in one of the stocks that has been rated one of the great companies. This is like GE used to be. This is one of the great companies. This is really one of the great companies in the world. And I never remember quite what they do because it doesn't sound to me like just monitoring temperatures.
Worldwide aerospace and equipment for energy.
I think they're in almost everything that pertains to aircraft manufacturing. And certainly one of their big things is Honeywell makes turbochargers. They're in the big stuff, but they also do a lot with temperature, moderating temperatures, cooling, and air conditioning, etc. But their major thing, I believe, has to be the big products, the cyclicals, huge things. Thermostats, that's what, the thermostats and environmental stuff. Thank you, Duffy and the Dan. But what's really important about this is I was going to go back and make the up arrow the low of 2014, the low of October of 2014 at 82.42. One of the reasons is in the Chapman wave methodology, we've got a break coming up. You know what? This is going to give me a chance. I want to just modify the monthly to show what I was looking at. But since it wasn't a trade, I never spent time on it. Do you have Honeywell at all?
No, but I'm wondering, what is this a buying opportunity, or
okay, great. Okay,
that's affect the whole group? Yeah.
Great. Okay, we'll talk about that. We'll be back straight off this break with Jerry in the Back Bay, Boston.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back with Jerry in the Back Bay. I didn't realize we've only got this one little section left. Oh, what a pity. I need a day on this stuff. So, Jerry, I would not be touching Honeywell. I've got it as a peak in my alternate count, which, funnily enough, this is what I wanted to do some time ago, because I thought if this is a C and the MACD is so weak, I've got to watch this real closely, because it just needed a hop, skip, and a jump to go to 119.35 for leg D. Hasn't been able to do that. So I'm having this as the alternate count, at least for now. A peak E in the monthly, a peak E in the weekly, and the daily is just gap down huge. I wouldn't be looking to touch this. It's at 105.73. Let's see how it holds between 102 and 96. That'll be the first big support level. If it fails to hold that, then there's a real problem. So I would not be doing anything. But in the longer term aspect, if we're still going to get another major move to the upside, this is one that I would look at. But I'm going to say to you, Jerry, hold off, be patient. Don't even look at it. Even if it makes a little bit of a bounce, it looks to me like it's going to have to form some kind of a base in at least the weekly, the daily, and the weekly chart. So hold off. Let's keep it in mind, but just keep it in mind. That's it.
Gee.
So
the whole industrial complex of stocks is getting hit today because
correct.
CPG is an all-star and it's down 10 points, and that's knocking down Sherwin-Williams 10 points. So
and Sherwin-Williams, right?
Thank you very much.
So thank you, and let's keep that in mind, but nothing yet. Let's go to Vic in Austin, Texas. Vic, how are you?
Hey, Basil, how are you?
Good. I got a quick question. Are you looking at NG, the stock, or natural gas?
Well, I like to trade the triple, but I'm looking for UNG, but which is a derivative off of the natural gas futures contract.
Okay. Do you have it already in your portfolio, UNG, or is this something you're looking to buy?
No. Actually, I'm looking to short it because I think it hit the top of the channel. I just wanted to see what your opinion is.
No, I would not. In fact, what I'm going to recommend to you, it might turn into a short, but right at this particular point, because of what's happening with crude oil, I'm going to say to you, natural gas is actually improving in the weekly and the monthly chart. Have patience. Let's give it a day or two. Maybe on Tuesday. Let's look at it again on Tuesday, if you don't mind. I would not be looking to short it, not at this moment. You might be right if it makes a doji candle and then it starts pulling back by doji candle Monday, and then it starts pulling back Tuesday. We'll look at it. At this point, it's one of the stronger sectors. That's, I think, the reason why this is also the season, I believe. That's Andy Heck's specialty, but I think this is the season you would see natural gas moving, and it is moving. No, I wouldn't be shorting it right now.
Well, I just was wondering whether or not it was just a slight, it had the last 2 days were pretty strong, and I was just thinking maybe it had to do with the hurricane, and then it might settle out Monday or Tuesday, and then move back out. So,
you might be right, but I'm suspecting 927 is the target that I have for the resistance. So let's give it those extra 10, 15 cents. Let's see what happens I wouldn't do anything just yet.
Yeah. Okay. All right. Perfect.
Okay.
Thank you.
Good eye, but let's just keep watching it. Vic and Austin. So, folks, I'm sorry we're about to close out. Check my opening call newsletter out for the weekend. I'm going to be adding a lot of charts over the weekend and preparing some kind of a webinar coming up soon. Now, here's the other thing. The VIX index. The VIX index is right at this moment trading at 1397. So it's back in the teens. If by the end of the day the VIX goes to the 14.40 area, and the market is down 90 in the Dow, 13 in the S&P. The S&P is much weaker than the Dow. If the Dow goes to minus 125, that's because the VIX is up in the 1430, maybe 1440 area. That selling will go right into the close. And don't forget, the debate on Sunday night is not going to be necessarily conclusive, but it's going to give us a whippy trading week next week. So have a wonderful week, and I will see you on Monday. Hey, don't forget, try to check out my opening call coming up this weekend. A lot of information. Have a great weekend and safe to everyone out there in the dangerous area in the South. And, of course, we're thinking of you. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,